Hey everyone, Jeff Dorman, Chief Investment Officer at Arca, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the crypto markets. Haven't had a guest in a couple weeks. For those listening, if you have a good guest lined up that you think would be good for us, don't hesitate to send us an email. Obviously around the holiday and the summer, not a ton going on in the market. Last week pretty quiet as well. A little bit of mixed results. Starting to see Solana outperform Bitcoin and ETH for the first time really all year. And that's what we wrote about this week on the blog. So if you go to our website, ar.ca/blog, you can read the written That's Our Two Satoshis. Look, a lot of people know that I'm on record saying that I don't think layer one protocols are particularly interesting. I think the valuations make no sense. We wrote about that a couple months ago, talking about the sum of the parts analysis. I think the fat protocol thesis is completely nonsense. I don't think you can really anoint any layer one protocol as being a success, considering 99% of the world's assets, meaning stocks, bonds, and real estate, are yet to be moved on chain. So even the leaders like Ethereum and Solana are really leading using assets that are experimental at best, because this is not the future of blockchain. The future of blockchain is likely to be assets that already exist rather than these made up assets that are crypto native protocols on chain. Regardless, traders are going to trade. And it's our job to look at trends and to look at fundamentals and to kind of marry the two. And right now, Sol might be the most obvious long. I think the title of the article this week was Sol equals super obvious long. And it's really just comes down to the expected demand that we're about to see, courtesy of some digital asset treasury companies, as well as the Sol ETFs. So, look, I'm just as wary as anyone else is whenever something becomes a consensus trade. And I think, Sol is very consensus right now. We're certainly not the only ones who are talking about this right now. But you may recall, it was just 6 months ago that ETH was completely left for dead. It had underperformed Bitcoin and Sol for most of the past 2 years. The narrative was that ETH can't scale and that ETH L2s are parasitic to ETH value capture. The chart of ETH versus Bitcoin or ETH versus Sol was basically straight down. Everybody who was a Bitcoin maxi or a Sol maxi was doing cartwheels and celebrating. And then, of course, ETH has been the best performing asset, or one of the best performing assets of the last 6 months. Remarkable turnaround. But why? Why did this happen? Well, a couple things, right? First, Circle IPO'd, and the narrative that Ethereum is the stablecoin chain emerged. And for good reason. Stablecoin AUM on Ethereum represents over half of the stablecoins on chain. So simply getting Circle into the public market's hands and showing them the success of the growth of stablecoins was a big win for Ethereum. A second, and certainly much more important, was on the heels of this narrative, the ETH ETFs began to hoover assets. So after nearly no growth for the first year of ETH ETFs' existence, Ethereum ETFs have now attracted an estimated $11.7 billion in net inflows in the past 6 months. So that's a monster amount of inflows, especially when you look at the fact that on many weeks and months, Ethereum is actually deflationary, meaning there's actually no net inflation on the Ethereum of ETH on the Ethereum chain, which is very different than some other chains. So that's a huge amount of inflows. Lastly, was the recent digital asset treasury craze had led to another just new inbound demand for ETH. Basically, $10 billion in ETH has been accumulated by these vehicles in the past 3 months alone, representing about 3% of outstanding supply of ETH. They didn't buy $10 billion worth. ETH is up 200% in the last 6 months. So obviously some of this was just the appreciation of the ETH token. But still, when you look at the demand of these ETFs and the DATs, it's no wonder why ETH has gone so much higher. So what does this mean for Solana? Well, aside from just a relative value catch-up, because Sol has lagged ETH all year, you got the same playbook playing out right now. The first Solana ETF in the US is already live, but it tracks the price of Solana and staking awards on a monthly dividend with a monthly dividend rate, but it's not one of the big ones, right? This came from Rex Osprey. But there's several other bigger asset managers behind it, including VanEck, 21 Shares, Bitwise, Grayscale, Franklin Templeton, Fidelity, CoinShares, and Invesco. They've all filed applications for spot Solana ETFs with the SEC. They're under review. The SEC has until October 10th to approve or deny them. Some sources think it's going to happen even sooner than that. Polymarket odds for a Solana ETF approval by 2025 are at 99%. So, odds are Solana ETFs are coming. More importantly, we're about to see the same playbook on DATs. So, SBET, meaning SharpLink Gaming, and BMNR, which is Tom Lee's BitMine, those are that's really the two-horse race when it comes to the Ethereum DATs. But there's currently 3 DATs in the market for Sol that look to be, maybe a similar kind of size and reputation as the 2 Ethereum ones. So we got James Zhang, who's in the market right now trying to do a pipe. And then there's rumors, and this is all public information that you can find a quick Google search. But Pantera is looking to do about $1 billion raise for a Solana DAT. Galaxy, Multicoin, and Jump are teaming up for another one. All in, when you look at that, there's about $2.5 billion of DATs being priced right now with the sole purpose of buying Solana. Excuse me. So, valuations aside, your love for blockchains aside, the market cap of Sol is currently 20% of ETH. ETH rose about 200% on the heels of roughly $20 billion in new demand. So it would, in theory, take 20% less demand to drive Solana up a similar amount. And we're already talking about $2.5 billion of demand just from these 3 DATs alone, not even including some of the ETFs on the horizon here. So not a perfect math equation, not a perfect science here, but you can see why people are bulled up on Solana short term. Combination of relative value and new demand, certainly getting people excited about this. So we're seeing it a little bit this week. Last week a little bit as well. Sol was up 5%, while ETH was down 5%. Even today, Sol having a green day while ETH is down. I don't think this is really a Sol versus ETH type of trade. Personally, I think they're all going to do fine. But I do think that there's some real momentum here in Sol. It's actually, to be perfectly honest, it actually scares me more that Sol is doing well while ETH and Bitcoin are not, because it leads me to believe that there's much more of a rotation trade happening than actually fresh capital coming in. But again, this is just front running the actual real capital that is coming in over the course of September. So the front running flows look to be rotation out of Bitcoin, out of ETH into Sol. The new demand coming from these digital asset treasury vehicles could actually spark a real market rally here over the next month or two. So we'll see if we're right. Like I said, consensus trades rarely work, and this is certainly a consensus trade. But we'll come back in a couple weeks and see how this plays out. If you want to read the full article and you want to see all the charts associated with what we're talking about, go to our website, ar.ca/blog, and read the full piece. Thanks, everyone. We'll see you again next week.